What a week that was. Really, I've done this for a long time, and it always amazes me to see something that seems a bit new. We had this election, we had an incredible amount of fear in VIX, in the MOVE index, which is your rates vol, in currency, gold was elevated. Everything kind of off the charts, very, very nervous about things. VIX was 3 times the level of actual market movement, right? We haven't seen that in many years. So, meaning that the VIX is pricing in something that really isn't happening at all. So, very little anemic movement. And so the call was, and I set up about 5 different ways to crush that volatility, to play that crushing of volatility into the event. Now, I thought it might take just a little bit longer into the FOMC as well, but all my structures played basically for the end of the week vol crush, which is exactly what happened. But most of it happened after the election. FOMC really was not a concern to markets in general, although it also continued to bring down that rates vol. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Do not do any of these trades without looking into this, doing some paper trading, and most certainly checking with a financial advisor. So, which only came down sort of a little bit, underperformed versus the VIX, which really got crushed, went from over 20 into the 15s very, very quickly. So we had this incredible move here. Of course, a lot of people were expecting Trump, but I don't think we were expecting the kind of breadth of the win, the depth of the win that he had, which seemed to really ignite stocks in general. Now, that sort of was broken down into various sectors, but eventually by the end of the week, most things got going, except for maybe a few things like solar. But really, even big cap tech sort of paused after the election, and then all the big guys, Zuck, Pichai, Bezos, they all came out to kiss the ring of Donald Trump, and of course, then they rallied as well on Thursday. So, really, kind of an interesting thing to see. Everything got going, right? Meta, Zuck and Trump haven't really seen eye to eye. Meta kind of really paused after the election. It was kind of down a whole bunch on the day, and then rallied back towards the end of the day, and then rallied another 20 points after that. As everything just started to kind of take part in the big melt up. And so we can see that here, that S&P came down, tested that 50-day, and the bears really, really got taken to the shed on Wednesday as we zoomed higher and really never looked back, right? That's the kind of gap that really doesn't fill right away. There's extraordinary amount of strength in something like that, and that is where people are underinvested and just quite simply know that the end of the year is bringing massive corporate buybacks, CTA buying, vol targeting that is now going to start to have to get re-risked into the market, which means buying into the market. And now, having said that, this was a big move. So just as realized vol starts to pick up in the short term, 3-month realized vol is coming down, and so isn't it funny that the VIX was pricing in sort of all this bark and no bite for so long, and the market was doing nothing. Suddenly, the VIX gets crushed and collapses, and the market goes bananas. Remember, upside volatility is still volatility, right? And I think that's why we saw sort of volatility kind of hang in there a little bit today, because upside movement, when it starts to get a little bit too extreme, which I think you got to admit, something started to go parabolic. We saw Tesla go parabolic. We saw Coinbase go parabolic. We saw Amazon do okay, pull back a little bit today. Some of the bigger names, big cap names, pulling back a little bit today. But some things really started to go a bit bizarro, crazy town on us. And so I think that's going to maybe at some point keep a little bit of a bid in vol until we see things kind of start to calm down. And strangely enough, you may need to see just a little bit of a pullback in the S&P for vol to drop even more. That sounds kind of weird, right? Because pullbacks in the S&P are normally associated with VIX going up. We may see a little bit of tempering of those animal spirits turn into a bit of a continuation in the vol crush trade. And so in our community, we put on some more vol crush trades for December this time, playing some downside VIX, because I think this could be an instance where maybe they're going to buy up every sort of 30-40 basis point drop, and volatility is just going to continue to get crushed as we have these things that I talked about earlier, the corporate buybacks, the people who have missed the boat and have need to re-risk, so to speak, right? They need to get back in the market. There's a lot of that. Very, very underweight in this market, especially on the tech side of things, although that's come back a little bit over the last month and a half. We have a lot of people who need to get into this market. And Trump is sort of this accelerant, right? Sometimes we talk about accelerants in gamma we normally talk about, which can act as an accelerant, right? When we see negative gamma, that means markets can kind of accelerate in the direction of travel. When we see positive gamma, that can act as a real wall. So I think there's a pretty good chance we can get up into this sort of 60-50 level. We know we've got this massive JPM call strike up there. That may act as finally the wall that actually kind of sits in there and prevents a bit more of a melt up at this point. Then maybe we can fail on this parabolic move, pull back below 6,000 again, and then stabilize and kind of sit around 6,000 for a bit. That's kind of trying to thread a needle a little bit, but that's kind of my idea that we could get. And so another very interesting thing is, excuse me, is I talked about this a few weeks ago. I said, listen, that upside, remember, if you guys have been watching my videos and reading my tweets, I said, look, the downside is massively hedged, and what happens when everybody looks too much at the left tail, like looking for that sell-off, they forget about the right tail. And I said, if we get going to the upside, these are interesting bets to the upside, because if we start to go parabolic, now we didn't know Trump would win in that way, but if we start to go parabolic to the upside, you could get that upside skew actually flip up. And that's exactly what happened. Look at this. Nobody owned the right tail. And on this rally last few days, the right tail exploded. That's not normal. Usually when the market rallies, you get a compression of call skew to the upside because people are hammering out all that vol because everything's okay again and they want to start generating returns or premiums, premium harvesting. This time, they had oversold that call skew. Remember, we said it's too cheap. We talked about that on the Leduc show. I talked about that in other places. And here it is, it swings back. So the left side got hit, got flattened, right? Everybody had pushed up those put values. Those got crushed, and the upside got pushed up. So this will be interesting. This might be our opportunity as we head into sort of 60-25, 60-50, into that JPM caller. This may be your opportunity as a call seller, for example, to hammer out some calls into decent sized skew, decent level skew, and that could act as a sort of nice little kicker of income, of added income generation in those positions. So that's one of the things I'm looking for as an income trader. I love to look for opportunity. This looks like opportunity to me. So let's see what happens. Let's take a look over here. Let's take a look at the Qs, which weren't left out of the party, but interestingly, we sort of saw, maybe a little bit of a hesitation, but definitely a clear kind of breakout above these levels that we've sort of struggled with here and here. As soon as we broke through there, boom, even Meta was up. We sold some 565s in December. Absolutely amazing trade. They were down to $10 at one point in a few days. So really nice cash secured put sale in there. I went very aggressive, right? I love the name. I had played it very, very well up into that high 590s level, got out of it, kind of almost scary how good the timing was. You don't always get to do that. And then it pulled back into, who knows what it was. Maybe it anticipated a bit of a Trump trouncing, and it got down there. The vols were still juicy because it was ahead of the election. So I said, perfect time. I'm going to go aggressive 50 delta. I smashed out those puts, got $25 for those babies, and they were down to $10 by the end of Thursday. Fantastic trade in there. Let's take a look at the IWM. This is one that I kind of got a little bit wrong. I was a little bit worried about rates being higher for longer. And so, I kind of rolled down some calls. I mean, it's still a good trade, except I have some in the money calls now to deal with, and I'm going to sort of take a look at this because a lot of Russell is floating debt, floating rate debt, and I don't know. This doesn't sit well with me. I like it. I like this broadening. I like the financials in there that are going to do well. I like some of the aspects of it. I'm going to be a little bit careful though. I'm not going to get super bullish, and I'm going to look to kind of maybe just keep generating premium if I see that nice call skew that I was just telling you about, right? That's what you want to look out for. You don't want to just sell calls into a parabolic move necessarily. You want a little bit of edge, whether it comes from a trend line, a double top, triple top, whatever it is, RSI, Bollinger Band, right? These are all great forms of edge. I don't care. Little bits of edge help everywhere you look. Give you a reason to do something in the market, sell calls, sell puts, whatever that might be. But some nice high vol is going to really help. But I'm going to keep an eye on this. There's no question that's a breakout. I want to respect a very solid breakout, but I think we're getting a little bit kind of crazy town a little bit out there right now in markets. So I have been taking off positions. We took off some amazing coin positions. One structure I paid $1.54, was it $1.30, $1.25, or $1.50. And sold our last tranche at 39.10. I kid you not. You get one of those every like once a year kind of thing, and so we had some really great trades there on Tesla and Amazon. Really great trades in the community this week. I'm going to do another video on those just to kind of recap all those, but it was pretty scary good for the second week in a row. So. But that's it for today. I hope you guys got a little bit of insight into what might be driving things, where we might get to, and what you might do because of the volatility situation that we're looking at. I'm sure it's going to be interesting next week. I don't know if we're going to get crazy again. I think maybe we just kind of had a little bit of a drift up, right? Everybody's looking for a pullback now, which means we may not get it right away. But I do think that we're going to get a 70, 75 point sell-off in the S&P fairly soon, and maybe it's going to coincide with that JPM collar, which I think is around that 60-50 level, and then we're going to pull back. But I really think that's going to be yet another buying opportunity for the most part in many names. I'm going to be looking for Shake Shack, Reddit. We killed it on Reddit this week. It was kind of scary good as well. Had Shake Shack. I mean, it was kind of one of those weeks where you could throw a dart at the newspaper and probably make money on a lot of plays. So let's face it. It was a massive bull market end of week. We crushed the vol on a number of trades. Here, let me grab those trades. I mean, those were kind of crazy. Check out some of these babies here. I recommended these trades in my community, in the Leduc trading room. This is my slide. It said volatility crush on the horizon. I said after elections, that's what happens, and it gets crushed for the next 10 days. So I had the VIX 19 puts. I actually paid $1.47 for some of these things, and I sold them out at 370. I had a fly that I paid 56 cents for. Sold it at $1.47. I think they're $1.50. They even got to $1.60 today. Even the day before the election, you could have gotten them for 110. So still pretty reasonable. SVIX Nov 26 calls got in at 90 cents, 260 on those babies. VIX DEES 15 puts. I didn't put this on. I did present this to the different communities I'm in, and it did great as well. I just didn't like the idea of selling that $5 upside spread for 30 cents. Just didn't fit well. But now that we're down here, here was another one. VXX long 48.46 put spread was trading at 55.60 cents, trading at $1.50 a couple days later. I mean, really amazing trades that took advantage of that crushing of volatility. In addition to that, we had a TLT iron condor that's captured about 40% of the premium we took in. It's down. I think we sold it at 72. It's down to about 44 cents, something like that. So really some amazing trades all around. We were even looking at something in DJT. Would have been a home run. Didn't do the trade, but the vol got crushed on DJT, and the stock didn't really do a whole lot after the election. At least not enough to really justify those crazy 400 or 500. I think they got up to like a 600 or 700 vol. You just don't even see that. You don't even see that on GME. It was just complete and utter insanity. But I just didn't want to get into that name. But I did put on some further downside vol crushing plays in the community today. I know a couple members did it, at least that said it. Hopefully some more did it. We're going to be getting probably down into the 14, 13 handle in VIX, I'm thinking, and maybe even lower by Christmas. So I think that downside, if you structure it properly, and you can, if you get into the community and see the kinds of cool things we're doing. I mean, you'll pay. We had members who made like 1,000 times their membership this week on trades. Like, it's ridiculous value, and then you throw in all the chart packages, my pure vol strategy, my stock strategy, like all the stuff that's in there. It's kind of scary good. So jump in if you can. Check out crushthepremium.com/training, and you're going to see it there. You're going to see all kinds of cool stuff. You're going to see my free courses, my free blueprint, my free ebook. I've got another free course on the way, and then of course my Crush the Premium method, and all sorts of other cool stuff that I've got available for people. Unbelievable reviews on these things, and I have people just like thanking me every day for allowing me into my community. I'm like, you're paying for it, but they're like, thank you so much for this. So makes me feel good. I'm helping people make money. I'm making money. It isn't always this great, but let's enjoy it while it lasts, and hopefully we'll keep that ball going next week. Okay, have a great weekend, guys, and we'll see you in the next video.